So the cost of total material used has like a 3 or 4 main items. If we add those items or subtract that item, so then what we calculate, what we get the cost of the material used. So here the cost of material used is how much? That is the $35,000 which we are using here. But to reach that value, we have obviously so many calculations. So just for the simple example, we just discussed that one. See, raw material may be for the shirt, it may be some fabric, it may be some cotton, it may be some other materials like indirect materials or direct material. But here we are first focusing on what? On the direct material, which is the raw material. So let's say they have purchased some of the material, and to purchase that one, obviously they have to pay some of the charges like carriage or the transport. They are purchasing it from the other city. So let's say they have purchased the cotton. They have purchased like a 4,000 kg of cotton, and the cost is, let's we say is $10 per kg. So this is the cost of total purchases. So how much they have purchased? They have purchased 4,000 kilograms. Okay, and the cost of 1 kilogram is how much? That is $10. It means the total cotton purchases as a raw material. So this is what? This is the direct material. So it is $40,000. It is the total purchase value. Now there is a possibility that there is some defect or it is not up to the quality. So some of the units or some of the kilograms or some of the kgs what they have purchased, they may be returning it back. It is called as the purchase return. It is the normal business practice. So some of the product which they have purchased from the supplier, it has some quality issue, so they are returning it back, or it is not according to their specification, so they are returning it back. So they may have returned some of the product. So that is what, that is the purchase return. Let's say we say 400 kilogram return is there. So it will be almost costing how much? $4,000 is the return. So it means 40,000 they have purchased, but 4,000 they have returned. But there are some other costs. Obviously, the cost of the transportation. They are not purchasing it from the same city or from the same town. They may be purchasing from the other city, or it may be from the other country also. There's a possibility. There's a cost of the freight, the cost of the carriage, or the cost of the transport. So the carriage or the transport cost is how much? We assume that is $3,000. So the product cost is how much? That is $40,000. 3,000 they have paid for the transportation. Obviously we have to add it because the transportation is increasing the cost of material. So 40,000 is the cost of the cotton, but 3,000 they have paid for the freight or for the transportation. It means the cost is not 40,000, it is 40 plus 3,000. It means the cost is total 43,000. But some of the cotton, some of the raw material or the direct material they have returned, the value is how much? That is $4,000. So what we have to do? We have to minus it. So if there is any freight or any carriage or any transport cost, it is increasing the cost of the purchasing. It is increasing the cost of the material. But if they are returning, obviously it will be deducted. It will be subtracted. So purchases is 40,000, 3,000 is for the transport, and 4,000 value they have returned. So it means the net purchase is how much? That is 39,000. Means 43 is the cost minus 4,000. So it means the value of the net purchases is $39,000. So this is how we calculate the value of the net purchases. Now the next thing is the concept of the opening stock and the closing stock. The cotton or any other raw material which they have purchased, obviously they will not use all the material during the financial period or during this accounting period or accounting year. So some of the stock will be still available. Why it is available? Because all will not be used. Some will be like a unused stock will be there with them. So some of the kilograms or some of the raw materials or some of the direct material, so that will be unsold at the or unused at the end of the year, not unsold, sorry, that will be unused at the end of the year or at the end of the financial period. So let's say out of this 4,000 kilograms, we say like a 1,000 kilogram or 400 kilograms or 2,000 kilograms or any amount like a 1,000 kilogram, we assume that out of 4,000 kilograms they have purchased, 1,000 kilogram is still available with them as a closing stock. So for 1 kilogram it was $10, so the value of the closing stock is how much? That is $10,000 is the value of closing stock. Means they have purchased 4,000 kgs. Out of 4,000 kgs, at the end of the month or at the end of the financial period, like they have checked the inventory, still 1,000 kilogram or 1,000 kg is still available. So the value of 1 kg was how much that we have calculated, or it was in the values or in the invoices, that is $10. It means $10,000 value is the closing stock, or 10,000 is the total value of 1,000 kgs. So this is the closing stock. So this is not the cost we have borne, so it will be transferred to the next period. So obviously we have to subtract it. So 43,000 was the total amount they have paid, 4,000 they have returned, so 39,000 was the total raw material that they have purchased. But there is some unused stock, 10,000 is there. So what we have to do, we have to minus it, we have to subtract it. But there was some material at the start of the period. Obviously it is not their first year of the business, so they are doing the business for many years. They have some opening stock, they have some closing stock. So whatsoever the opening stock was available, obviously that is adding the cost. So we assume that they have a cost of opening stock $6,000. So $6,000 is their opening stock, which was available at the start of the month or the start of the accounting period. During that period, the total purchases is 39,000. It means now they have a 6,000 available from the previous period. 39,000 they have purchased during this period, the net purchases. It means the total available stock which they can use for the production is how much? The value of that stock, the cost is that how much? That is $45,000. But $10,000 is still unused. They have checked the closing inventory. So it means during that period, the total cost of the material which they have used for the production is how much? That is 35,000. So this is how we calculate the cost of the direct material used. The next thing that we have is the cost of the labor. Obviously, they have so many workers in the factory. It may be a direct labor, it may be an indirect labor. They have some of the people who are working on the machine. Some may be just helping the process. So direct labor, indirect labor is there. So some skilled workers, some unskilled worker or semi-skilled workers are there. So they will prepare the sheet for all those workers on the hourly basis or the monthly basis. And the cost of the direct material which they have calculated, obviously we will do the calculation in detail when we will go for the labor chapter or for the other concepts. So the labor cost is how much? $25,000. So this is again the complete calculation process is there. So 35,000 is the cost of raw material used. 25,000 they paid to the labor. The cost of the labor is 25,000. So their prime cost is how much? That is 60,000. Now the third thing, which is the indirect cost or the factory cost, like indirect material, indirect labor, fuel of the machines, depreciation of the machine, insurance of the machine, electricity, water, lubricants, so all the other expenses in the factory, that is how much? That is 30,000. So if we add all these three things, like we have 25,000, we have for what? For the labor, we have a 35,000 for the material, so the prime cost was 60,000. And if we add the factory overhead 30,000, it means the 90,000 is the total manufacturing cost. So if you remember, in the start we have the same value, 90,000 total manufacturing cost, and we calculated the cost per unit. So this is how we are calculating. We are starting with the direct material, what is the opening stock available from the previous period. We will add the net purchases, which is the combination of the purchase during the year, plus we will add any of the transport expense or the transport cost, and we will deduct or subtract any of the purchase return. So we will get the net purchases. We will see that how much is available for use. 10,000 was available already, 6,000 was available already. 39,000 they purchased, the net purchases during this period. It means 45,000 is available for use. 10,000 is still unused or still closing stock of the raw material, which will be used in the next period, not in this period. So it means we have to deduct it or we have to subtract it. So if we subtract it, so what we get the value of 35,000 as the material used, and then the labor cost and the factory overhead cost. So the total manufacturing cost we get as a final value of 90,000. This is how we are calculating the total manufacturing cost, and then we will go to the work in progress or the finished goods. So in this way we will complete the cost of goods sold statement. I hope you have understood that concept. It is not still complete. In the next lectures we will complete the cost of goods sold statement. Thank you very much.